Natural gas futures are currently hovering around $1.80, supported by producers' efforts to curb output. The current El Niño weather pattern, predicted to persist through March in the northern hemisphere, is contributing to above-average temperatures. The outlook for natural gas prices is currently constrained, primarily due to the unusually mild winter in the United States, which has led to reduced heating demand and increased supplies. Analysts forecast significant warmth in the Midwest and eastern U.S., further impacting demand. Meanwhile, an uptick in U.S. electricity output signals a positive trend for natural gas demand from utilities. However, the overall electricity output over the last 52 weeks shows a marginal year-on-year decrease. Bloomberg has issued a natural gas supply report where it calculated markets will need 1.8% more volume over the summer to meet demand growth compared with a year earlier. Several European trading desks report that Asian buyers are coming into the European markets to buy at low prices, creating further upward pressure on European gas prices. Russian gas deliveries via Ukraine are set to come to a halt at the end of 2024, with a transit agreement coming to an end between Russia and Ukraine. Under current conditions, it does not look likely that a new deal will get signed, leaving Europe scrambling to replace the already reduced exposure to Russian gas via external flows. Meanwhile, nat gas traders can swiftly change their perspective. French President Emmanuel Macron's remarks were promptly countered by both German Prime Minister Olaf Scholz and NATO Secretary-General Jens Stoltenberg. The absence of boots on the ground signifies NATO's non-involvement in Ukraine, a red line for Russia from the outset. This suggests the tensions are not escalating further and the situation remains at a standstill. The short-term outlook for natural gas remains optimistic, with its direction being influenced by continued production management and changes in demand. From a daily technical perspective, nat gas is facing some pivotal technical levels to get back to. The next step is $1.96, the level which, when broken, saw an accelerated decline. After that, the resistance line at $2.14, near the 50-day moving average, comes into view, along with the triple bottoms from 2023. If we get a winter storm in the United States, it could cause a short-term spike, which is exactly what this market desperately needs. So, if natural gas experiences sudden demand upticks, $2.30 could come into play. Otherwise, we might simply move sideways, gradually forming a foundation. Such a basing pattern could endure for an extended period. On the downside, $1.70 is a target to look out for. Another leg lower could come if global growth starts to shrink and there is less demand. Add to that equation both the US and Canada trying to free up more volume of natural gas mining, and the scale could quickly tip into an oversupplied market with more downside prices at hand. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.